All right, everybody, welcome back. You can see I'm on the demo account. You can see it is right up here, simulated trading. This is not live. I wanted to make this video because I've kind of been having a discussion with people lately about the frequency of a trade and the win rate of a trade and money management. It's real important to understand, guys. You don't need to win every single trade. You don't even need to win 50% of the time if you're running a good money management. You could literally take a trade every single time you have a setup opportunity. We just hit that Fibonacci. It's a support line. It's also the roundy. I'm going to jump in this trade. Okay, so we just set the order right there on the dome and try to get filled. I'm going to add some buttons up here. So there we are. We're filled. We're in the trade. We want to add buy market and cancel, flatten, and maybe sell market. We'll start with those and see what we get. We want to move those up. Keeping my eye on the market as we go. Okay, so now we got our buttons up there. That'll help us get in and out of the trade. Now, once I got filled, and I'm going to swap over to a single. I got filled with 3. Now we're in with a single. We want to run the money management here and make sure that we don't get ripped apart. In the current market environment, look at the size of these candles. They're like 5 or 6 point candles. We're going to need to be at least 10 points away. So I'm going to put my first stop at 90. Notice how I'm doing this, and you can do it on any dome. It doesn't really matter. Just click the button and put your order on the dome. So there it is. I didn't have to do limit orders, market orders, anything like that. I just threw it on the dome. I don't want to get out of the entire position, though. That is a support level. It might hold. Price could come down because it's a very wicky day and smack into that spot and bounce right back off, and I could still be in a good trade. So I'm not looking to exit the entire position right there. I want to watch the flow of the market, and maybe if it wicks down right there, it might let me back out, and I can exit somewhere up here with the other 2 contracts. Okay. We do want a disaster stop in place. So what a disaster stop is designed to do is, suppose for a moment the market just does this. Big candle, it just drops in the blink of an eye. It will move too fast for you to do anything. Look at the size of that candle right there. So we still have 2 contracts. We want to make sure that we're protected. I don't want to get stopped out at 80, but I want to make sure that my account is protected. So I'm going to go down to 80, and I'm going to put an order on way down there. It's only there in case of a disaster, in case the market just suddenly drops really, really fast. I do not want to get stopped out there. Okay, these are protection only. So now we're safe, quote, safe. We want to start fading out of this position. Now I got in at, I was aiming for 11. I got in at 10, 9, 99 and a quarter. I want to start to lock in at least a little bit of profit. I'm out of 1 position already, so I can remove one of those. Okay. Why I did that is I wanted to make sure I locked in at least a little bit of profit. This could still turn around and stop me out. So at least now I've locked in a little bit of gains. And if we move up, well, we are holding above the round number. So this stop that I have way down here, I'm going to move it up a little bit. Not too close. I don't want to accidentally get wicked out of my trade with that stop order. But I no longer need such a deep stop. Okay. So I've moved it up just a little bit. I still want to try to hide underneath this structure. I would even argue that perhaps I moved it a little too far. You see this wick here. Maybe underneath that wick would be a good spot. But the market's still rallying up. It's still moving in our direction. So I'm going to bring that stop up a little bit more to the 97. I'm still hiding behind that roundy. And if the market started to challenge me, hopefully it would get stuck right in here. If we get above that 10, I'm going to come above break even. But you know what? I'm close enough now. I'm going to go ahead and do that. So there's my break even. I'm going to bring my stop up just barely above that break even. I still don't want to get too close, right? And the target is up here. So we're going to put in an exit order at 12. So we'll just reach up there and put on an exit order. What we're looking for here is to get in its structure and get out up here at the top of the range. But I still want to leave a runner on. I don't want to get completely out up there. And this disaster stop way down there, well, we can move that up now. We're going to put it right underneath this wick. Right there. That's pretty good. So remember, the disaster stop, we don't really want to get stopped out with that disaster stop. If the market comes up and takes this trade, I'm going to kill that disaster stop, and this will be the only thing left underneath the market. All right. Now, why am I going through all of this? Well, I've had a lot of people who say that they're not comfortable with the dome, and they're doing all their trading with these buttons, and that's fine. But, like at the open, the market's running really fast, and we find it hard sometimes to get in, especially depending on the different brokers out there. So I wanted to show you that there's a different way of doing business, right? That you're not stuck with this concept of only using the buttons and putting in the market orders and all of that. You can just set your order on the dome, okay? This last one, I'm going to move it up now since we broke above structure. I'm going to move it up. Let's go up to $8. Remember that if price was to start falling, we would hope that it gets caught here on this structure. If it doesn't, we really don't want to be in the trade anyways, right? Because that means if it doesn't hold there, the market could just come down and come all the way back down, and we don't want to give up all that profit. So I'm going to hold the line there and say I was only looking to get back to the top, and I've left a runner on in case we keep going, but I made my profit in the trade. I'm done and I'm happy. Right now, I'm just hoping for more. If I get it, great, no problem, but I wasn't aiming for this as my target anyways, right? So I did what I was looking to do. I got in at 11 and I got out up here around the 10 range. As a 10-point move, I'm day done. Everything else is just gravy, right? Remember that I already locked in some profits with that first contract because we didn't know if the bounce was going to hold. So I locked in profit there. And now I've left a runner on to see what I can get out of it. And I do want to get back up into this 40 range. The 25 is a very dangerous level though. And with only a single, that 25 becomes a rejection point that might wipe us out. All right, so there's nothing that I can do to lose at this point. This is a winning trade. No matter what happens, I cannot lose money. Now, I could, at this point, start to discuss ways to let this runner run. I could move that stop back down into the lower range here and give this market more room, okay? And if you feel that the market is going to make a move way up here, why not risk some of that profit, right? Why not risk some of that profit? We don't have to, though, right? We could just put our order right here at the top at the 15 and say that's it. And if it stops us out, it stops us out. There's no wrong way to go at this point in the discussion. If you are the kind of person who says, I really think we can get back up there before power hour today, I think it's worth a try, then set it up like this. Okay? If this thing just continues to run and it builds some other structure that I can hide behind, I can bring that stop up. But if I really think that it can get way back to this area, then I don't want to get too close and risk getting stopped out. It's going to struggle at that 25, and I know that it will. Okay? If I get too close and we take what is called a soft rejection, it can take a short pullback there and kick us out so quick, we wouldn't even be able to react. Look at the wick size of that candle. It would have got us, right? If we get above the 25 and we close above it, I will be more comfortable with moving that stop up, maybe into the upper area here. In fact, seeing this move, we're just going to go ahead and do that. So we're going to grab that stop and we're going to move it up into this area. All right. We're still in a trade that we cannot lose. And I think 1150 is a reasonable target. So we're going to put in an exit order up there at 1147. And when price starts moving a lot closer to this area, we might move it up a little higher or, get it out of the way. Because you never know. It could be one of these major thrusting candles that just goes skyrocketing towards that. Well, I'm going to get out of the way and let it go. That thing could pop all the way up to 1200, right? So we'll manage it at that point. We're just going to let it go a little bit. And we're going to talk this out. I hope that you go back and you watch this a couple times and watch how I got in and shifted the money loss around, how I put on that disaster stop, and how as soon as I could reasonably safely do it, I began moving the contracts to eliminate some of the risk out of that trade. I locked in the profit very early in this trade. You don't have to necessarily do it that quickly, but you're going to want to fade in or fade out of your positions so that you can manage them better, right? We didn't know for sure that this was going to that the bounce was going to hold and that it was going to come up and break this range. We never know for sure, right? So I wanted to make sure that I locked in that 5-point profit off the bat and still had some trade left. There's nothing wrong with a 5-point profit. That's a really good trade. So I got my 5-point, and then I got my 12.5 points, and now I've got my runner on, right? So combined, right now, I'm up 17.5 points, and I still have my stop. I still have a runner. In this whole move, the market has moved 30 points. I've already got a guaranteed profit of half of that, 17.5. All right? And the trade is still going. So we're going to look to move this stop up just a little bit more, right around that quarter. Okay? It's 1125. We'll get it more specific just by moving it like that. So there we go. Now we've got our stop, and we are a lot closer now. I think perhaps maybe even a little too close. The reason I did that, though, is if I get stopped out at 25, then I'm going to have a really nice quarter-to-quarter trade from roundy to 25, and that's I'm going to take that. I know that I'm risking this extra up here by doing this right here. This is a very dangerous thing that I just did, but I can't lose money. I can only lose some of these potential profits. I'm okay with that. All right? So since we had such a high target, we could think about adding into the position again. We could say, look, if our target really is the top of the range, why not look to add to the position? Get back in with some more contracts. We could do that, but since I had already started with 3, and I'm already doing so well in the trade, and I'm no reason to get aggressive, I don't really want to do that at this point. You do want to consider aggressive trade tactics, what you can do to increase the size of that account very quickly. There are a lot of aggressive growth trade tactics that we can use that lock in profits and maximize small moves. Look how close I am to this trade. I decided that I didn't want the video to go too long, and we're almost at 15 minutes, so I'm going to go ahead and let it stop me out. But I just don't want to hit the flatten button and bail out. I want it to stop me out if that's what it's going to do. And as long as it keeps running, I'm just going to keep trailing behind it really tight. I'm really in a dangerous spot here. It's almost guaranteed to stop me out. And there it goes. So I'm out of the trade. That made $1,045 in 15 minutes. We had a nice little discussion. Get that stop off of there, clear the dome, and now we're ready to go for a new trade again. Guys, this was just a paper example of walking through the trade, of realizing that we can pull the trigger at any time and just manage the money. It's what it's all about, managing the money. The reason we don't pull the trigger at any time is because we want to increase our chances of success. And by doing that, we focus on consistent trade setups and tactics and strategies. Hey, I look forward to seeing you at the next video.